Hey guys, I'm Big Mike, and like always, I'd like to thank you for being here today. Today is our Ask Me Anything session with FuturesTrader71. We have just 30 minutes. There's no prepared presentation. We're going to just jump right into the questions. After the 30 minutes are up, then I will post the recording of this AMA session in the thread on BMT. If you don't know where the thread is, you can just do a search for AMA space FT71. All right, guys. And with that, I'm going to go ahead and start turning things over to FT71, and we'll start taking the questions. There's already quite a few here. So FT, maybe you can just throw up a chart, and then I'll start with the questions.
Sure, hang on.
We've got good timing here. ES just had a nice big flush right in the middle of all this.
Pretty crazy on the news out of Cyprus. It's been driving us a fair amount. You'd think a country that small isn't going to have that much of an effect, but I actually, I had a webinar just before this for our traders at stage 5 and just taking live trades and so forth, and it's funny, I read it wrong twice, Actually, I read it wrong once. I got long early looking for it pushed to 53.50, and I got stopped, and then I got long 44.25 for 47.25, and there was a lot of news coming through, so I closed the trade just
Yep.
to hedge risk, and then next thing you know, I tell everyone, well, it's over, and then it goes to right to 47.50. So I would have gotten a full fill at 47.25. But
that sounds actually almost exactly what I did this morning. Long looking for 53, and I ended up taking off a little bit early and made some money on that one, and then long again about 45. And I closed it with basically break even, probably about 5 minutes before we had the big flush. So, all right, man, let's jump right to the questions.
Mm-hmm.
Let's see. Reno says, hey, you mentioned a few times recently that you have new educational material. Can you elaborate on that?
So FuturesTrader71.com was created as I call it a almost like a community service thing. I was on Twitter and folks kept asking me questions, and I kept answering the same questions over and over. I had no place to archive chats that I was doing, throughout the week, just to kind of.
This is back a few years ago.
Yeah, this was like 2-3 years ago, and it started out and then the webinar series was started out as a way to just get everybody up to speed to a point, and to also raise money for my charity. That's how it started. There's a huge demand for proper education, and what I'm going to be creating, what I'm working on is based on a lot of experience over the last year and a half that I've been a broker or been in brokerage, and seeing what issues people are dealing with, and it's intended to be ultimately, it's going to be a curriculum, much like a university degree, where you have to pass. You have to study material. You have to pass it before you can move on to the next. And then there's potential of also a live seminar here in Chicago or something, just to put it together. And the idea is not to fill a room with people, get money, give you a binder, and say good luck. The idea is it's just like it is in real life. I don't believe in these weekend seminars or whatever. Just like it is in real life, it's a continuous process of gaining more and more experience and knowledge of the market. That's what. A doctor doesn't just graduate from this residency, become a doctor, and it's over. Eventually, they do a fellowship, they pass their boards, and then they specialize, and on and on and on. Trading is no different.
Right.
So that's really what I'm looking to create.
Okay. All right, guys, and I want to remind everybody that you can go ahead and type in your question. Steve asks, what's the harmonic rotation on the Euro FX, the 6E? He's talking about a 5-minute chart. He says, if you don't know it, how can he calculate it? And he also wants to know if using that figure is a good place for a scalping target.
You're not going to like my answer because I'm going to tell you to do the homework. I mean, here's my euro chart. I'm using, I believe, a 14 tick. Okay, so a 14 tick pullback on the zigzag to mark these. So I'm looking for, I would say, I haven't traded the euro in a while. In fact, we're going to start offering the micro euro as a learning tool at stage 5 at a heavily discounted rate so people can actually interact in the live market. To answer your question, I think, I don't know what it is recently, but in order to determine what it is, you have to go to your time frame. So you said 5 minutes. Why isn't this switching? 5 minutes. 5 minutes, and then what I do with Investor RT is I export. I start at some number, pick 10 ticks or whatever, and then I start to figure out how often that happens and what happens when that amount. So if you choose 10 ticks as a starting number, you start to look at how often does the market rotate for 10 ticks, and when that 10 ticks is exceeded, how often does it continue in that direction? And it gives you a threshold, which for the ES is 2.5 to 3 points is normal. I cannot honestly say what it is for the euro. I can find that out, but when you're studying rotations, it's really important. I think you hit the point. It's really important to look at them in your time frame because that's when it matters. For example, when I'm trading the ES, I've got my rotations set to 1.5 tick back because I'm expecting the average rotation to be about 3. But down here in this pane, there are 2 red lines at 4 and 3.5. And what this chart, this histogram does is it's plotting the zigzag or the rotation. So this rotation here from 46 to 35 half moved down, what is it, 10 and a half points. And this, the rotation that tends to be excessive in the ES is +4 or -3, and that's based purely on statistics. So what I've done is I exported the zigzag indicator into a spreadsheet, and I looked at, what is normal, which is 68% of the 68% or 70% of the data set. What is the second standard deviation, which is 95.5% or so, and then I look at, okay, when it goes outside of that threshold, which is 4 points, how often does it exceed 4 points and continue to go in that direction, or exceed 3.5 points and continue to go in that direction? So for me, if there was something in here for me to fade or to buy the sell-off, and there is something down here at 35.50, if there was something along here and I saw that the rotation has expanded tremendously, I would be interested in taking that long if I'm going to fade the trend, which is not how everybody should trade, but that's how I trade.
Right.
So I'm always looking for balance in the market. I'm always looking to trade towards balance. And then the question I have to ask myself is, if I took that trade on, say, a 5-point rotation and I'm using a 2-point stop, how often statistically, by exporting this zigzag indicator, how often does a 5-point rotation turn into a 7-point rotation? And you'll find a statistical number for the data set that you're testing as to how often that happens, and it's not very much, So that tells me that getting in at a -4-point or 5-point rotation with a 2-point stop, is the probability of my stop getting hit is not so high. But I don't do it at random and scalp around it, although that's how I started trading as a high-volume scalper. I do it against some substantial level that has to do with the context of the day. and that's the tricky part. Let me turn down my news feeds. It's a lot of noise.
I know that there are a lot of NinjaTrader people in the room also. So there's a user on BMT that posted a study that you can put on your NinjaTrader chart, and it'll do something similar to what you're using with Investor RT, and it'll export out the zigzag or the swing high low levels into an Excel study. Okay, let's go to the next question. Robert asks, what is the best way to enter an iron condor? Should I enter each leg separately, asking halfway between the bid and ask? If entering as a spread in my credit while evaluating the setup of the trade is 3.0, should I do a limit order at 3.0? I'm confused on entering condor the best way.
Oof, I will not answer that question just because although I know what an iron condor is, and I've traded butterflies against a fund that I was running and things like that, it's just not. I have not looked at the options market recently. I know when I used to put on butterflies, I used to have to better than split the difference, but I just have not looked at that market to tell you with confidence that that you know what you should do. It's just it would be out of place for me to speak about something that I really did not study up on.
There's going to be another AMA session with Carly Garner. She's great with options. That'd be a better question for that. And I see some people asking about the thread that I just mentioned, or the thread I just mentioned for that NinjaTrader indicator. It's in the master homework thread. You can just do a search for master homework. Okay, next question. Rhonda asks, regarding opening swings, I've listened to your webinars and reread your material. My levels usually align with yours, but I'm not clear on what to do with this information beyond the flush of desk orders. Can you give us a little bit more about what the opening swing tells you?
Okay, so let's look at yesterday as an example. Yesterday's opening swing. So yesterday we gapped down, and we had, I'll just draw the opening swing as thick lines. There's some action today. So the opening swing here yesterday was about 39.50 to 37.75. In this context, when the market opens out of range, which means obviously it's out of yesterday's value, I'm trying to determine what the opening swing is along with the day type, and I'll cover that in webinar 2. If I know not the day type, the opening type, if it gaps down and it just runs straight down with no counter rotation, it's an open drive out of range. So that information tells me, hey, if you're looking to buy today, you better be quick, or you better have very short targets, or trade half, quarter, an eighth, whatever, much smaller size. 1 second. I'm going to mute you for a second. Just
no problem.
Just a quick second.
Yeah, that was his risk alert system.
Sorry, one of our traders is just not following his risk plan. Setting off alarms.
Rhonda had a second part of that question too. Sorry, she was also asking you about the closing swing. If you want to elaborate on that, she wants to know if you use a closing swing to look at the next day's potential.
Yeah, the closing swings. So what we're measuring with the opening swing and the opening type is what kind of action is coming into the market by the bigger players on the open. If they're not there, it'll chop around like it did yesterday before they, a bigger trader or bigger participant steps in and starts pushing like yesterday's rally. So that's very important information. It sets the mode or the context for the day. It's the first piece of information you get. The closing swing is the same thing. The closing swing is measuring what was the market on close action. So the opening swing is the market on open action. Closing swing is market on close. Not to be confused with the opening range or the closing range, because the opening range and closing range are fixed in time, 1 minute, 5 minute, 15 minute. The pit uses, those to determine what it is in time. The opening swing just looks at what has happened what has happened, where did buyers step in on the open, where did sellers step in on the open, and it creates a sort of a limit, and then you can use that as a measuring stick or yardstick for what happens next. The closing swing is the same. So the closing swing yesterday was 43.50 to 48.75. We open above it, and then we start to, as the day progresses, like today, and this information is only useful at the beginning of the day, we open just above the closing swing, we dip back into it and hold long, hold the long side, and that's why I got long here. I got long actually right here this morning. But once we fall through the opening, the closing swing, I'm expecting the other side, 43.50 at some point. And basically, see this today? See this yesterday, 43.50? When we look at today, you'll notice that we kind of walk to it. See 43.50, 43.50 before it tries again. And then, of course, the Cyprus news makes us puke just now. But the closing and opening swings are really measures of who participated at the open, and they leave footprints. They leave a watermark that says, here's where buyers stepped in right at the open, here's where sellers stepped in at the open, and here's where buyers stepped in at the close, and here's where sellers stepped in at the close. That's what it's for. It sets the mood.
Okay. So we're at the halfway point. We got 15 minutes left, and we'll get back to trading. Michael asks, are you using a tick index?
Like the S&P tick, I don't use the S&P tick. It's not very, I found over the last, I don't know how many years, I found that it's not important to me. I use the S&P tick. And the S&P tick just looks at the 500 stocks, and what I've done is I've put thresholds on this S&P tick. What do I care if a $2 New York Stock Exchange stock is upticking? I don't really care. It's not going to affect the S&P 500. It doesn't have any weight yet. It's reported among the almost 9,000 stocks traded on the New York Stock Exchange. I'm more focused on the S&P tick, and then I have thresholds, which are not showing up here, but I have thresholds for that too. So I've taken the data, the instrument data, and I figured out what is the normal range for the New York stock, for the S&P tick, what is extreme, what is an outlier, 2 sigma or better, and then I generally will look to fade a tick reading that exceeds those thresholds in against an area of interest. It's another way for me to get a decent entry.
Okay, and interesting that you mentioned that. A user, I think his name is Arnie, just posted, sounds like a similar study. Again, on that master homework thread, he did all of this analysis on the extremes and
yeah, I have that on my site.
Okay.
I have that homework on my site in the research area.
Joseph asks, can you explain your thoughts on intermarket analysis? You write on Big Mike that you cut your teeth on it. He's looking for more info.
So trading intercommodity or intermarket trading is tricky. Trading across products is tricky because although a lot of products are correlated, like I have a spread ratio correlation chart that shows, a lot of products are 92 to 99% correlated with each other. The problem is that just because, trying to trade the S&P or the Dow off the S&P, that used to be a game that, I made a living off of for a long time. That's essentially what I did when I started. You basically fill a screen with about 6 domes for various correlated products, and you trade the one that hasn't moved yet, so to speak. And it used to be easier. Now there's so much high-frequency stuff happening between the different commodities that it's hard to catch an edge before a computer sees it. You really have to be fast. And then the other thing is that a lot of these markets do not operate on the traditional underlying valuation-based trading. Now it's the market's hooked on stimulus, it's hooked on news, and so it's not behaving the way it normally would. For example, you might see that the Russell's breaking new highs parabolically, but then the Dow is just sitting sideways, and so is the S&P, and the NASDAQ is pushing towards the low. And trying to trade the relationship has become pretty expensive. I mean, you have to have deep pockets. It's much better, in my opinion, to look at your product and really understand it, its behavior, and also statistically understand it. And then use the other markets. I have alerts on every market, like new low NASDAQ. If I'm long and I hear new low NASDAQ, it doesn't take me out of a long, but it gives me a bit of a context or warning or sense of what's happening elsewhere. If I hear, on top of that, if I hear new low financials, then I'm starting to pay attention. But don't trade. I suggest you don't trade one product off of another.
Okay. I'd like to interject a question of my own. How important, if you had to weight two different things, indicators, just in general, any lines on a chart, no matter what their source, and trading statistics, like what you were talking about earlier, what kind of weights would you assign each of those as to the importance of trading?
Okay, so statistics give you a behavior, a general behavior, behavioral pattern, so to speak, on a fixed data set. The market does not have a fixed data set. It's a continuous flow of information. For example, this morning's long had multiple statistical edges that I tried to exploit. Double the IB high, to have two highs at the IB high, which is this line. The IB is the first hour high and the first hour's low. To have multiple touches of the IB high and finish the day with the IB high intact, the probability of that is 18%. So there's an 82% probability that you will end up breaking a double or triple IB high. Triple actually has a higher probability. So that's the reason for this 49-quarter long this morning. Okay, and in addition to that, there's a statistic that I've mentioned before that says there's a 96% probability that the day session would break the high or low of the night session. Okay, and since I had the double IB high and the overnight high was 51.25, to me this was a very high probability trade, and so there was there was no question I was going to take this trade. It's just a matter of what price, right? So I got in actually at a very, very great price. It's a lucky entry. But the news then took it down and stopped me out. But that's a probabilistic trade, but I took it against the mid, a line. So it's not an exclusive thing. They kind of work together, okay, so I know that the probability is there, but where do I take my trade? I look for the lines on my charts to tell me what areas I should be interested in.
Maybe I should have asked, how much time should a trader spend? Because I think that traders disproportionately spend time looking at a chart instead of doing homework or research.
I think doing your research, there's this big word, context, that I keep throwing out there. Context is much better solidified with statistical study. You'll be more confident. Like getting in at a moving average crossover or VWAP or whatever, you can do that all day long, but still not have the same confidence as someone who knows that the probability of this today being a trend day is X%. The probability after yesterday's trend that this would continue is X%. The probability that 3 balanced days in a row within each other, there's a small probability that the fourth day will be a balanced day. So you come in with a much bigger, much more holistic approach. So the individual price that you buy or sell doesn't matter anymore because you have a big picture, and that's what statistics. I think people just do not spend enough time on statistical analysis and homework. People think homework is more like drawing lines on charts when you should be studying behavior.
Okay, let's go to the next question. Merritt asks, Well, actually, he says his time frame on the ES is typically going for 3 to 5 point rotations. Yesterday, you mentioned that the trend was up. I take it that this is a trend on the daily chart. How do you define trend, and how does that apply to your intraday trades?
I said it was a trend day up, not, I don't remember if I said it was a trend. Oh, I said the trend is up because that's what the market's doing. The market has been in a price discovery up mode. This is a daily chart. This is my composite. So the trend is up. This is just a small pullback right now. So you know, I want to trade with the bigger trend, and I know that taking shorts is fine. I'll take shorts all day long, but I know that I can't hold on to those shorts as strongly or be as stubborn with them as I would with a long in the bigger trend. So I'm looking for that. Let's see. The rest of the question was, I think it's trying to, how do you define trend? Trend cannot be defined. In my opinion, I've seen a lot of arguments on various forums about what trend is. Trend depends on your frame of reference. You're looking to 3 to 5 point rotations, so you're probably trading in the 10 to 15 minute chart range, somewhere in that range, or you're using bigger parameters. The trend for you is going to be what was yesterday versus the day before versus today's open versus where we are. You know, you're not going to go much farther than that because your goal is smaller, 3 to 5 points. Someone who's looking at holding a swing for 3 days has to look at a much bigger frame, and that defines a whole different trend. A scalper might see the current action here as an uptrend, you know, because it put in a double bottom, it's putting in a higher low. I'm going to try to, you know, go for the long and back into mid or whatever.
Right.
So it's not something that can be. It's like asking someone, which car should I buy? It really depends on so many factors that it's just not easy to. It depends on what you want. In other words, you know.
Okay, next question, only a few minutes left. Chris asking, with all the various indicators and strategies out there and every guru offering the new, quote, holy grail, he wants to know, what do you find works best for entries and exits in the E-minis? He's personally using a TMA, I think that's a triangle moving average, balanced against the VIX. He wants to know what your opinion is.
It's how do you like your steak? You know, it's just, you know, it's whatever feels comfortable to you, because ultimately the moment of truth is right when you enter. So, excuse me, I don't believe in indicators simply because I feel like they obscure. Indicators is like buying the best piece of steak you can get your hands on and then covering it with ketchup. You know, I want the auction. I want to feel and see the underlying auction. So. However, some people have a hard time reading through the noise, and so they need some sort of an indicator to help them. The VIX, for example, you have to be careful because it behaves differently near expiration than it does, you know, throughout the rest of the month. I don't know what to tell you as far as what's good, what's bad. Should you use it? Should you not? I feel like to move to indicators is like skipping the basics of doing anything and then jumping to the next thing. It's like not learning how to do subtraction and division and addition and subtraction and jumping to a calculator right away that does it for you. It's fine on the surface, but you would be a much better mathematician if you understood, you know, your times tables and how division works. It's kind of similar, to use as an analogy. It's not bad, but understanding the basics gives you a much better foundation so that you're never at the mercy of a guru changing his, you know, his TMA settings, you know, the periodicity and things like that. You're always, right. You can create your own.
Okay. Just a couple more questions, then we'll be out of time. Bo's asking, he says he just finished your 4 lectures on webinar, and he wants to know, do you take trend trades based on joining momentum, or do you only take counter moves and fade strategies?
Okay, that's a good question. I get asked that a lot by our traders in the chat room. I take the trade against an edge, whether it's fading with a trend. So for example, if I got long, like the longs I took today, I can sit here and argue before this Cyprus finance minister resigning news that came in on this bar, I can sit here, argue, and convince you that my trade is with the bigger trend, the long. But someone else who's looking at a 3-minute time frame might see a long in this trend as a fade. So I'm not trying to avoid the question, but to me, it doesn't matter. I will fade back. I will fade a sell-off back to value if it has a statistical edge or if it shows me an edge in the context. Sorry, my window's open at the Board of Trade here, and there's just a ton of fire trucks. Hopefully it's not in the building. So to me, it's like it doesn't matter. Again, you have to define trend. Sorry, they're passing. You have to define trend. What time frame are you in? What are you trading against? And I'll bring you back to what I mentioned in those videos, and I constantly mention all the time. Ask yourself the 3 questions. What has the market done? What is it trying to do? And how good of a job is it doing in getting there? And in answering those 3 questions lead you to the context answer, which is what's more likely to happen from here? Is it likely to move up from where I am, or is it likely to move down? And just take the trade. Don't overthink it, you know?
Right.
For me, I would have taken this 35 long, no problem. You know, nice rotation into it. It's got everything going for it that I need going for it, because my goal here is to get 2 points on the trade, cover my risk, and if I can catch a runner back to this low volume node at 43.25, holy cow, Chicago's burning down again, I guess. If I can catch it back to 43.5, 43.25, I am done. That's it. I'm done my job for the day. I'm just looking for 2 points. And
right.
I'm looking for opportunities that give me those 2 points.
Okay, let's make this the last question, and then for everybody that did not get their question answered, they can ask them on the thread. Last question. More Chocolate wants to know, are key reversal times legit? For example, people that say that there's reversals at 10 a.m. or 2 p.m. or whatever, that certain times of day. Do you put any weight behind that?
It's I have a study that exports 30-minute bar charts, and you can do this as well on pretty much any platform. Just export 30-minute bar charts for, say, 1,500 trading days, and plot the probability that a certain half-hour time frames high or low ends up being the high or low for the next 3 bars, meaning that's where the market turned. Personally, in my study, the way I studied it and the way you study it can give you different results. It's all statistics, you know, crap in, crap out. It's a coin toss. I don't believe in that. Hey, it's the you know, 10 o'clock reversal. Well, it works today, then it doesn't work for a week, then it works for 3 days in a row, and then everybody's like, wow, this works, it's amazing. But look at it statistically, you'll find that 55% of the time, 54.8% of the time, the market reverses at the 10 o'clock
Right.
10 o'clock hour. That's not, to me, that's random. You can just toss a coin and come up with an answer. It's the same. Right?
Yep. Okay, so with that, I want to thank FT for spending time with us today. We're going to let everybody get back to trading. I will post a recording of this in an hour or so on the AMA thread. For all of you guys that did not get your questions answered, there's an open thread on BMT. You can ask the questions there. Also, we plan to do these AMA live sessions regularly. I'll let you guys know when the next one's going to be. I'll post it in the thread. FT, I'll see you next time.
Thanks so much. Thanks for having me.
Thanks. Bye.
Take care.